Disclaimer: everything we discuss here is not financial advice. Always do your own research or seek advice from a financial advisor. Welcome to another episode of ChargePoint Studio. Sit back, relax, and have a drink. Today we go back in time to understand where we come from. In March 2021, ChargePoint went public, but not entirely without help. Who do you think helped ChargePoint get listed on the NASDAQ? Bank of America helped ChargePoint as its exclusive financial advisor. The bank had a deep understanding of the company's operations, including its plans to become profitable. This knowledge would have been essential for Bank of America to provide ChargePoint with effective advice and services. The bank conducted an extensive due diligence review of ChargePoint in 2021, including reviewing ChargePoint's financial statements and projections, analyzing ChargePoint's business model and competitive landscape, assessing ChargePoint's management team and strategy, and evaluating ChargePoint's growth and profitability potential. You have to understand that Bank of America doesn't just help any company go public. The consideration that ChargePoint has to provide is closely monitored by the bank. A bank is not your friend who comes to help you. It's all about hard cash in the first place. If a bank doesn't make money, there's no reason to help a company. The bank was able to provide ChargePoint with insights and recommendations on how to improve financial performance and achieve profitability. Moreover, Bank of America's knowledge of ChargePoint's profitability plans would have been important for its role as co-placement agent on the pipe. Bank of America would have used this information to bring ChargePoint to the attention of potential investors and convince them to invest in the company. A private investment in public equity, or PIPE, is a type of financing transaction where a publicly traded company sells shares of its stock to private investors. PIPE transactions are often used by companies to raise capital quickly, as they can be completed more quickly than a traditional public offering. Bank of America served as a co-placement agent on the PIPE transaction. In this role, the bank helped ChargePoint identify and solicit potential investors for the PIPE. The bank helped ChargePoint negotiate the terms of the PIPE transaction with investors. Bank of America's knowledge of ChargePoint's plans for profitability would have been important for its role as a co-placement agent on the PIPE. Potential investors would have wanted to know how ChargePoint planned to become profitable before investing in the company. The bank would have been able to provide investors with information on ChargePoint's business model, competitive landscape, and financial projections. That was 2021, now to 2023. In May 2023, it became clear that ChargePoint was experiencing delays in its path to profitability. The bank once again looked at ChargePoint's plans and adjusted the plan to become profitable. Bank of America identifies cash burn as the primary reason for ChargePoint's underperformance in 2023. The significant cash outflow in the previous fiscal year and the remaining cash balance are key concerns. The bank emphasizes that for EV charging companies, future potential is crucial, but negative short-term cash flow is inherent. Therefore, investors need clear visibility on when cash flow will turn positive. Now we jump from May 2023 to February 2025. Let's look at ChargePoint Report's third quarter fiscal year 2025 financial results. Total revenue is $99 million. The total cost of revenue is $76 million. This means that the gross profit is already profitable. You heard it right. ChargePoint's business model is already profitable with more than $22 million. So where is it going wrong? The total operating expenses are $90 million in total, which is still way too high. Research and development costs more than $38 million in one quarter. Sales and marketing spends more than $34 million in one quarter. And this is the pain point for ChargePoint. It is quite easy to solve by reducing costs in research and marketing. Gross profit is already profitable, so we are closer to profitability than most investors think. I hope this information has given you some insight into where we are now. For me, this is the time to buy as much ChargePoint stock as possible. Thank you for listening and subscribe to our YouTube channel. Stay strong, ChargePoint brothers.